What's up, everyone? Uh, Today is August 6th. It's a Friday. It's the last day of the trading week. And this video is going to be a little bit different. Right now, the market is open. So I'm attempting to make a live video where I just cover my thought process of what's going on in the market. I'm also going to be talking about how I formulate my plans and how I just wait for those plans to execute. And this video is gonna have a heavy emphasis on psychology tips as well. Let's get started. So right now, yeah, the market is open. Quickly, some context. This is my layout I use for TOS. So I have two brokers, IBKR Pro, which is on a separate laptop, and that's how I execute my trades. And then TOS is just my charting platform where I look at charts. So I have four screens pulled up. I have SPY, QQQ, which is the market, gives me context. And then I have two stocks which I watch. So I was watching Amazon and Microsoft, both on a 5 minute time frame. Let me remove extended hours. I don't really use extended hours. Okay, so the first part I want to cover is just how I formulate my plans. So I guess I can kind of do this live because these plans have not been set up yet or haven't been executed. So let's go to a higher time frame, and I can kind of show you how I formulate my plans. So I'm gonna go to Amazon, and I'm gonna go to a blank chart. So how do I do that? Is it default maybe? No, I'm trying to figure this out. Create drawing set. Okay. So I have a blank chart on Amazon. So let's start from scratch, and I can show you exactly what I do, how I draw my zones, how I draw my levels, and then how I just wait for price to come to those levels and how I execute. So the first thing I do is I'll always start off with a higher time frame, so weekly time frame, and I'm pretty much only gonna chart zones which are close by. So I have a couple of weekly zones. I don't really like weekly time frame. I usually just start off with the daily time frame. But on the daily, I can't really see much. So then I just go down to a 4 hour time frame. And again, I'm only going to chart zones which are close by because I kind of just deal with the area I'm working in right now. So I have a 4 hour demand here. You can see we have a clear basing candle and then we have a rally candle. So I'll mark that as 4 hour. We have a 4 hour demand right here as well, which it's in. I'm just gonna mark this as 4 hour. Again, I don't know if we're gonna bounce from this demand, but this is a 4 hour demand zone that I want to be careful of. I don't see any supply, so I'll go to 3 hour now. So 9:30. This candle will close in 3 hours, 12:30. So there's currently an attempt of a 3 hour supply trying to be put in, but I don't want to validate that just yet because the candle hasn't closed. Same for 2. If I go to 90 maybe. Okay, yeah. So on the 90-minute time frame, we have a 90-minute supply. So I'm just gonna mark that as 90 minutes. Again, I use 0 indicators at all. All I use is my zones, my levels, and then volume. So just price and volume is pretty much all I need. So I'll mark that as 90-minute. Besides this, I don't really see any more supply zones or any demand zones. Keep in mind that there's gonna be supply up here and there's gonna be demand down here. I'm just not interested in it because price hasn't come to that area. When price comes to that area, then I'm gonna draw the zones and I'm gonna draw the levels there. But right now, this is the area I'm working with, so this is the area which I'm gonna focus on. Quickly go down. I can quickly go to a 1 hour, 45 and 30-minute to see if there's any zones. Don't see any there. Don't see any here. 30-minute. Don't see any zones right here. So the next thing I do after I draw my zones is I just identify areas of support and resistance in that general area. So one level which I really like is this level. So I'm gonna draw that out. So I mark it as resistance. And then we have that gap to fill. So this is kind of the picture or the story I've created for Amazon in this general area. So the story based off of my zones and my levels is that Amazon gapped down over 200 bucks on earnings. I don't know if it was bad or not, but it did gap down over 200 bucks. Then it's been consolidating for the last few days. We have demand zones lower. We have a supply zone. And then the level which I would be interested in taking on Amazon is this 3388.84 level. I'm not worried about the supply zone, and the reason why is because the level is above the supply zone. So when we break the supply zone, we don't have any fresh supply stopping Amazon from moving higher on this breakout. And on top of this, we have a gap to fill. So there's multiple confirmations for this 3388.84. First of all, Amazon's been consolidating for a while. So as I talked about, the market is going to move from stages of impulse to consolidation to impulse. So Amazon gapped down. Now it's been in its consolidation phase. And after consolidation, we're usually followed by an impulse move to the upside or downside. But I'm going to be focusing on the upside because of SPY and QQQ. SPY made a new all-time high today. No reason to fight the trend on both ES and NQ. Haven't considered short positions in a very long time, just because the market is making new all-time highs almost every single day or week. So go back to Amazon. So that's pretty much my plan on it. No fresh supply stopping us from moving higher. One other thing I really like about it is that you have to think about where retail is going to enter. So retail also knows we have this huge gap, but retail likes to enter close to psychological numbers, so 3,400. So if I enter at 3388.84, I would just sell my position to retail at 3,400. So if I do take this breakout, one of my first targets is going to be 3,400, and then probably just every like $10 after, because there's no resistance in this area. So that is a fully structured plan. I have a target. My stops are kind of hard. I would have to look based off of intraday action, but it would be a stop which made sense, maybe at 33.85. So notice how I just took a blank chart. I created the story and the picture for Amazon. I found the levels which I would be interested in trading. I drew out my zones to find out where institutions are placed. For example, you can see that we are now bouncing from this 4-hour demand zone. And because we hit this demand zone, I'm going to mark it as used now. And yep, so that's my fully structured plan on Amazon. I hope that helps you in understanding how I draw my zones, how I draw my levels as well. So yep, that's Amazon. Now I'm going to go back to, what do you call it? My execution layout, so I can go over a little bit of context today. So that's the first thing I covered, plans. Okay, so now I'm going to be going over a little bit of market context. So one thing I want to keep in mind is I'm only going to trade the names I'm comfortable with trading. So Microsoft, Shop, Google, Square, Apple, etc. These names. Hood, I'm still testing out just because it's caught momentum lately. Not sure if I'm going to trade it. I'm just studying the price action. But essentially, I'm only going to trade the names which I'm comfortable trading. I understand each of these stocks. I understand the spreads of them. I understand how they move. I understand how the contracts move as well because I've traded them several times. So I only formulate plans for stocks which I'm comfortable trading. I know a lot of people today were watching GS. So GS is what? Goldman Sachs, I think. But GS made a new all-time high today. However, I was not a part of this move because I don't trade GS. I don't know the price action of it. I don't know how the contracts move. So I'm 1,000,000% comfortable just sitting out of this trade, even though it did work out. I only trade stocks which I know how they move, and pretty much yeah. I'm still studying Hood. I'm trying to find the price action of it. The reason why I'm watching Hood is because it caught momentum recently, like GME and AMC. So I want to see if there's any levels. I'm just studying the price action of this on the side. So that's just a tip on only trading stocks which you are comfortable trading. Next thing I want to go over is market context. So one thing I really, really want to go over is the concept of fresh versus used supply zones and demand zones. So the way zones work are that institutions are essentially are placed in these zones. So I'll give you an example of fresh zones which work out. Let's go back to Amazon. No, it's not. Okay, Microsoft. I know Microsoft. So the way that fresh supply zones work out or demand zones are institutions are basically placed in these boxes or in these zones, you could say. So take this 1 hour use zone. So we created 1 hour demand here, price moved higher. We came into the fresh supply zone. So institutions say they had the rest of their position sitting in this zone. So when price comes into the zone, their orders are going to fill and the market's going to move higher. So now when institutions have got their entire liquidity filled, so when all of their orders were executed in this box, the zone becomes used. So when there's no more orders sitting inside of the zone and the zone is used, it has a low chance of working out. I'll give you an example. So NQ had this 1 hour demand zone. Price came down in the overnight session, hit the zone. The institutions got their liquidity filled, they got their orders filled, and the market moved higher to the supply zone. And then when price came back to this demand zone, institutions had already got their liquidity filled in this demand zone. Hence, this used demand zone has a low chance of working out. So that's why in my videos, whenever I say I don't look at used supply zones, I don't care about them, it's because they have low chances of working out. So that's just a tip on use and supply zones. Uh, I kind of want to go over the fact that a psychology tip is there's not going to be opportunity every single day. What do I mean by this? So you can see that what did SPY do yesterday? SPY yesterday, or ES, was in a clear uptrend. You know, we were making higher lows. We had an end of day rally. There was clear volatility, volume, and momentum to the upside. Let's go to QQQ. Same story. It wasn't as clear, but yes, NQ did move to the upside. We moved about $100 to the upside. There wasn't as much volume, volatility, momentum. However, this was still a nice move to the upside. That's why yesterday I was able to catch over I call it like a 60% return on Square, and I missed out on an extra like 100 or 200%. So the best opportunities are going to come when the market is trending one way. So when SPY and Qs are trending to the upside, longs or calls are gonna be high probability because the market is imbalanced. However, the market is not going to be imbalanced every single day. If the market was strong one day, the chance that it's going to be strong the next day becomes lower. And you can see this because what is SPY doing right now? SPY is choppy, no clear direction on this. NQ after a strong day yesterday is now weak. It breached low of day. This used demand zone didn't work out. So when the market is choppy and weak like this, the main plays I was watching were Microsoft above 289.7. I was watching Amazon. I showed you from scratch. I was watching the 3388.84 level. What else was I watching? And the last one I was watching was Tesla above the 724 level. Had multiple touches right here. So when the market is balanced or when the market is weak, my plays are not going to set up. And the main thing to keep in mind is when my plays do not set up, I simply do not trade for that day. If I just recap this week, there was a over 200% winner on Tuesday on Amazon when the market was imbalanced, and there was a 200% winner on Square yesterday when the market was imbalanced. You have to ask yourself logically, are we going to have 200% return plays every single day in the market? And the answer to that is no. We're not going to always have opportunity like that. So to save mental capital, to save commissions, to save my own money, I pretty much do not take trades when price is not close to my level, or I do not take trades when the market is weak or balanced. So that's just a psychology tip. You really do not need to trade every day because there's not going to be opportunity every day, and that's kind of a thing which is kind of hard for newer traders to understand. We get filled with emotions when we're trading because we're dealing with real money, and emotions are all over the place when you're dealing with real money. You feel like you can make millions of dollars every day when that's really not the case. That's not how day trading works. Day trading works by capitalizing on a couple of opportunities which make your month, and then staying disciplined enough to not overtrade or not give anything back on those balance days. So I'm going to say that one more time because I feel like that's really important. Day trading is not trying to make $1 million every single day. Day trading is trying to catch a couple of opportunities every month, which result in large winners, and then staying disciplined enough to not overtrade or not trade at all on when days are balanced and when there's no opportunity. So that's kind of the harsh reality of day trading, and it can definitely be profitable if you just stay disciplined. So those were a lot of psychology tips. You can rewatch that, or you can just DM me if I wasn't clear. Final thing I want to go over, just because I just noticed this, is the concept of relative strength and weakness. And I'm going to be showing you a live example right now because a lot of people are still confused about this. So I'm going to go over to Microsoft right now. Microsoft is really the best example. See if I can find relative strength on any of these names. AMD. So AMD today has clear relative strength. So what do I mean by this? I personally do not have a level on AMD. I don't have a fully structured plan on AMD. Hence, I'm not going to even consider taking any trades on AMD. I don't care if it's in a demand zone. I don't care if it's in a supply zone. I don't care if it's moving like 10%. If I do not have a plan on a name, I am not going to take the trade. But I do want to give you a live example of relative strength. AMD closely correlates with NQ. You can see that NQ made lower lows. What do I mean by this? NQ made its first low at 955, and then it made its second low at 1105. What did AMD do? AMD opened up at 110. That was its first low, and then its second low at 1105. When NQ made its lower low, AMD made a higher low. And that's really, really important because that tells me that buyers are clearly interested in AMD. So if one of my stocks I was watching, like Microsoft, had relative strength, it had volume, volatility, and momentum towards my breakout level, then I'm definitely going to take that play if the market aligns up. But when the market is in balance like it is, there's no point of even watching the screens, in my opinion. What I did is I just set alerts for Microsoft, set an alert for Amazon, which I deleted because I was making a plan, and then Tesla, I have an alert. So I try not to waste too much time. I just set my alerts and walk away if the market is balanced. So I hope I did a good job of describing, of trying to do a live video. This is my first time trying to do a live video. I hope more people watch it. I know I haven't done any live trading. I am looking forward to live trading. I'm just not comfortable yet, but I want to practice with these live videos first before doing any live trading. But I hope you guys understand the harsh reality of day trading, and I hope you understand these psychological tips because these tips are what is going to save you from blowing up your account in the markets pretty much.